Hello, my name is Adam Ching, and I am reporting on Ciba Specialty Chemicals case analysis. For Finance 139, Professor Shirogi. On March 12, 1998, Ciba Specialty Chemicals announced its acquisition of Allied Colloids, a company known as a global leader in water treatment. Allied Colloids acquisition aligned with Ciba's goals in the form of establishing a new pillar for profitable and sustainable growth in the area of water treatment additives. Being the ambitious company that Ciba was, they realized that Allied Colloids could be the platform they had been looking for. This would allow them to enter the water treatment market due to Allied Colloids' established global market position and strong technological developments. Allied Colloids was more than just a water treatment company. The company consisted of 5 divisions: water treatment, additives, colors, customer care, and performance polymers. With its diversification of processes and an entry into a high potential market, it was easy to see why Allied Colloids was a target within Ciba's sights. The value of the gains that Ciba saw in the takeover of Allied was based on financial reporting, improving product performance, as well as increasing value for their shareholders. At its core, Ciba desired to produce and sell high-quality chemicals and enhance the longevity and performance of their products. Being the worldwide company that Ciba was, it was their goal to produce positive results within the global markets. As a leader in biological chemicals, Ciba was dedicated in meeting the needs of the healthcare, agriculture, and in the industry. Ciba felt the acquisition between Allied Colloid would enhance the quality and value of their business as well as product performance. Ultimately, Ciba's goal is to create value for its shareholders, and the acquisition of Allied is just one step in the process. Other steps include evaluation of strategic projects, financial reporting, portfolio adjustment, and incentive and share investment plans. To ensure the shareholder wealth is of the utmost importance, Ciba introduced incentive share plans and pay structures that tightly link the interests of its shareholders with employees and its managers. Ciba acquired Allied Colloids in 1997. The financial statement for this year showed the company is having sales of $7.8 billion and a net income of $571 million. The following year after the acquisition, sales rose by $85 million. With this rise in sales of around 11%, net income for the company dropped to $369 million. This drop was partially caused by difficult market conditions. However, during this year, Ciba initiated a restructuring program that would save the company $150 million in 1999. This table shows Ciba's sales and net income for the years following the acquisition. Although an increase in total sales from 1997 to 1998, Ciba experienced a net loss following the merger. This effect was due to difficult market conditions, and it was in the second half of 1998 that the company saw the full financing costs related to the acquisition of Allied Colloids. Sales from 1997 steadily increased each year until 1999. During the end of 1999, Ciba signed an agreement with Morgan Greenfield Private Equity, who intended to buy the Performance Polymers business. Due to this business transaction, the company's financial statements show a decline in sales from 1999 to 2000 of almost a billion. This can be deceiving since Ciba's net income rose slightly over 28%, from $325 million to $452 million. When looking at Ciba's financial statements, we can see that the company took a pretty big hit in 1998. Since then, the company has made a strong and steady climb in the right direction. In the case of owner's equity, this is no different. Looking at the chart illustrates owner's equity along with sales and net income. We can see that for the most part the company has looked very strong since 1998 in sales, net income, and equity. Overall, the acquisition of Allied Colloids by Ciba had a positive effect on the company. For years following the merger, sales have increased, and thanks to a company restructuring program, expenses were cut by $150 million in 1999. The result has been an increase in net income as well as owner's equity. Stating that a specific party won would indicate that the opposite party lost. When looking at this case, it is difficult to say which, if any, company could be considered a loser. Due to the strong financials that were discussed earlier, I would have to say that Ciba definitely benefited from the transaction. Not only were they financially stronger after the merger, they were able to diversify the company, which allowed them to enter markets that they were previously not able to enter. This diversification also reduces their risk. Allied Colloids, on the other hand, was rescued by their White Knight, which kept them from being acquired by the US company Hercules. It was Hercules who initially offered a price of $155 a share for Allied Colloids. If Allied were to take this offer, it would have been a definite loss because outside analysts said the company was worth around $180 a share. Thanks to Ciba, Allied would eventually accept their offer of $205 per share, which was significantly above their perceived value. In the end, Allied would be purchased for Ciba's offer for $2.3 billion. In addition to the financial benefits of the merger, many jobs were to be saved with the purchase by Ciba. David Farrar, the chief executive of Allied Colloids, said, "I believe we have saved the jobs in Bradford and the jobs of 3,400 people who work for us around the world. Ciba have said they want to grow our business and a reduction in the workforce is not a factor. If Hercules was to purchase Allied Colloids, they feared large job losses were inevitable. If I were to determine a clear loser out of all of this, I would have to say Hercules. Not only did they lose out on the technological benefits that were paramount with Allied Colloids, but Hercules calculated if they were to acquire Allied Colloids, they would have saved about $200 million a year in costs, as well as they missed out on additional benefits. In recent years, Ciba, the acquirer of Allied Colloids, has been acquired itself. The purchasing company is the world's biggest chemical group known as BASF, who finalized the deal in 2009. Ciba's downfall had been its lack of backward integration, which led to margin erosion. Ciba and BASF board of directors reached an agreement in which all parties agreed on the merger. The transaction was finalized early April 2009 at a price of 6.1 billion Swiss francs, or about $5.5 billion US dollars. This result was surprising considering Ciba's strength and growth in the late 1990s and early 2000s. Thank you for the time of listening to my presentation.